Hey, what's happening? Really good day in the markets here. ES was cooking today and a lot of good trades, so I wanted to run through those. We're only about an hour in, but I'm going to call it a morning. It was a super good morning. I just got the 15-minute opening range breakout target hit. That one was for 20 points, and then had a bunch of halfway back trades actually, in addition to a 1 minute hammer. So let's run through today. Monday, Tuesday, Wednesday, super slow, nothing going on. I didn't have any trades except for Monday's 15-minute opening range breakout. Otherwise, no trades Tuesday or Wednesday. So today, we opened with a slight gap down, and we started to move lower. And one thing you can do using the 21 EMA, I'm not a huge proponent of having a lot of junk on the chart, indicators and moving average, stochastics, and that kind of thing. It clutters up the chart and it makes it hard to interpret the price action. You'll see I have these, so this value area, point of control, value area high. Those lines I start on my chart the night before. So I have the prior day's value area, and then this 21 EMA, I'll get rid of this 50%. We'll talk about that in a minute. The 21 EMA I do find helpful to kind of give a general sense of the trend. You can put a trend line on the chart here just as well. But the 21 is helpful, especially at the open. When you only have trading hours only on your chart, you're going to see the gap from yesterday's close, and then you're going to have this catch-up period where the 21 is going to go from yesterday's close, and then we'll have to kind of catch up to where price is since we have that gap. And so that helps me be a little bit more patient and wait for us to pull back to that 21, and that sort of initiates or gives us a direction or a signal of that potential direction for the trend. So in the first 15 minutes, we were trending down. The 21 was reflective of that, and we came up to the 21 here, right about little after 15 minutes in. So the first trade I had was a short with that downtrend, and it was actually on the halfway backs, and so drew up a halfway back from the high of the day to the low of the day, and that 50% lined up nicely with the 21 EMA here. We were going up, higher highs, higher low, higher high, higher low, higher high. Then we broke the swing low right here, so I drew up a little 50% short. We formed this red kind of inverted hammer here, but we hadn't broke the low yet. And but we did break this swing low, came up to the 50%. So I took that as a short, and then we did come down and break the anchor points low just by a tick. So I moved to break even, and then I got taken out for that first one for break even. Then things got moving fairly quickly in here. We had a 652. We started to change trend here, starting to flatten out on the 21 and move up. 652, and these are Pacific time. I'm in Arizona, so we don't do daylight savings. So now we are on Pacific time. We kind of flip-flop without flip-flopping. Let's see, 652. So this was actually another short. The 50%, where are we? Oh, that was the up at value area low. So this was almost a double top for the day. And so we came up at the time we were like this, and so the 21 EMA I wouldn't really call this a strong uptrend here, just sort of flattening out. I was more interested in this value area low, seeing that as a potential resistance point. If we broke above the high of the day, well then there was a really good chance we're gonna just come up the rest of the way and fill the gap, and that's what we did. But at this point, it's like this is the last line in the sand that could, this double top could roll us over and push us into lows. So 652 was this 50% short. Same thing as the one before it. We broke a swing low back here. This resistance point is the value area low. Traded at the 50%, traded down. I drew up the next 50% retracement. This one was pretty small, and moved my stop above the 60.18. So that only ended up being a 1.25 on that one. But as I was getting taken out, or even before I was getting stopped out, I noticed that we had come down and then started to come up, which was forming this hammer. And so as I got stopped out of the little short there, I was watching my countdown timer, watching this hammer to start to form, thinking, okay, if we can't move down here, then this hammer is forming at the 21. We're close to breaking highs and filling the gap. So in getting stopped out, I put my order one tick above this hammer, and this happened super fast. I got taken out of the short. I was ready to go for this long because I could see the hammer forming kind of at the same time. And I dropped my order, and like 3 seconds later, we had this little pop and shot up through that the high of the day and got this 654 bar. And so from there, then all you have to do is just once that candle closes, move your stop underneath that candle's low. And then let the next candle, these are 1 minute bars. So let that 1 minute go by. It closes, move your stop underneath that low. And then the next candle, yada, yada, just continue to trail your stop until this red bar here, this was an inside bar, so nothing to do. You leave your stop below the initial breakout bar, and then the following bar makes a new high. And so put your stop underneath that bar. So that was a really big move. It was 12 and a quarter points on that run up. At that time, the 15-minute opening range breakout traded on this 654 bar. I did have a couple ticks of slippage on that one today. It filled during this, whatever this little, 4 or 5 point shoot up was. So the hammer got filled, and then it was like 3-4 seconds later before we popped. But then the 15-minute opening range breakout order, that was out there. I have multiple accounts. So one account is just dedicated to the 15-minute opening range breakout. So I will set that order for the top of the range and the bottom of the range. I'll set that at the 15-minute mark, and then I'll basically just minimize that trade ladder and then just have my other one up that I'm doing the hammers and inverted hammers in there. You can also, with certain brokerages, you can segment your funds within the account now. So you could have one account, but the money is kind of segmented through to allow you to have kind of multiple layers of positions on. So that was that hammer. That was a super nice trade there. And then the next one was 709. Like I said, a lot of trades this morning, lots of good momentum, good movement. Just when you compare today's price action to Monday, Tuesday, Wednesday, it's just, way easier to trade. So if you can stay patient through those choppier times, it makes it a lot more impactful when you get to these good days, and then you're actually, layering on gains instead of just filling in a hole that you dug. So 709 was, so at this point we came up, we filled the gap, came up to the point of control, and then 709, where was that here? So that was, we had this guy here. This was a halfway back at the 30-minute high. So you can see this gray line here. I always like to mark the 30-minute high and low because that ends up being a very good indication if we stay within the 30-minute range. So that would be in this area. Then, well, by definition, we're range bound. If we can break out of the 30-minute range, after 30 minutes goes by, and if we break out of that like we're doing here, okay, now we are going into a trending environment. And so we had fallen back into the 30-minute range just briefly, and so this was a counter trend trade, meaning it's going against the 21 EMA, which is pointing up, or against the uptrend. And I took it at the 50% here because it lined up right about with that 30-minute high. So 57, 54 and a quarter. And then that one rolled down pretty quick. I drew the next retracement, put my stop above that 61.8, and then that's where I got taken out for about 3 points. And then one more, and this one was a long. Now that we broke, now that, the 30-minute range really couldn't hold us in, we started moving out and moving up. So then 718, where was, oh, that was this. So we had 50% retracement on the left chart here, drawn like this. And so now we're on top of the 30-minute range right here. This 50% retracement kind of lines up with this 21 EMA. You can see that theme there of the 50 and the 21 coinciding, really helpful. And so I drew up the opposing short like this, saw that we broke the 61.8. So then, and the swing high. So then I came in and draw this real little tiny halfway back long, thinking, okay, that should be a little bit before the breakout, but hopefully shoot us into new highs and take us higher. And it did take us into new highs, but then we had a larger sell-off or larger pullback here. But since we just started shooting up, and since the prior trades, I really wasn't getting more than like 50% retracement follow through to follow up with trailing my stop. This one I just decided to trail each candle. So we got a quick run up, and I just came in and ended up putting my stop like right around this bar here. It was like a 61, and so that one was another 4 points. So really, really good day between the halfway backs and the 1 minute hammer back here. Only one of those, but that was good for 12 points. And then the 15-minute opening range breakout was good for 20 points. So really big day. Happy to stay patient in the start of the week, like I said, to have then later in the week those, when those good days do roll around, then you're kind of stacking bricks on top instead of just filling in a hole that you dug. So hopefully more of these days continue, and they will, but you're going to have the consolidation periods within that. I did not buy puts on, what day was it? Tuesday. On the daily chart on the ES, we had came right up to the 50% short, but on the SPY, which is where I would buy the puts, and even the NASDAQ, we did not make it to that 50%, so I chose to wait. We did get, yesterday's sell-off was a good one, but now we're right back kind of at the next 50% long, so not a huge deal. If the S&P can move up, or SPY can move up a little bit closer to that 50, I would consider it. It's a little bit odd to have such a big spread between the two, whereas like right now we're at the 50 or we traded at the 50 already on the ES. Well, if we get up higher on the SPY, this 21 EMA is going to start to turn, and then kind of the next 50% retracement is going to be a little bit above that. So I'll watch that area, but it doesn't feel like we're bottom falling out bearish with the market right here. So look for some opportunities to buy things as well, in addition to a hedge with puts. So that's what I got for you today. If you have questions, feel free to drop them in the comments below, and you can always tune in to the live trading sessions over at EminiMind.com/VIP. Thanks, everyone, and have a great day.